Okay, so the S&P index is doing a top sign today, just under a very strong resistance area. Technically speaking, the index is about to trigger a dead cat bounce, a quick bull rally in a bear trend before it crashes again. This would be a catastrophic scenario as we might enter in bear market again, but there is one last hope for us. Tech stocks. As crazy as this sounds, after all the problems concerning inflation and rates, etc., tech stocks are surging as a safe haven in this storm. So let's take a deeper look into this. My name is Nathan and you are welcome to the Finance Hydra channel. First, looking at the S&P index over here. Yes, we are doing a very strong top sign. We are under the 21 exponential moving average. We are below the 39.49, this black line over here, which did work as a support level 1, 2, 3, 4 times, and right now it is working as a resistance level following the principle of polarity in technical analysis, which says that previous support levels are going to work as future resistance levels and vice versa. So, okay, this movement is not a big surprise after all, but it is quite problematic to see Tesla doing such a strong top sign under a dual resistance level made by this black line and the 21 EMA. In order for the S&P actually reverses this bearish sentiment, we would have to see a crystal clear bullish reversal structure. So far, there's not a single bullish reversal structure. So far, the S&P is just doing lower highs, lower lows. So far, we don't see higher highs, higher lows. If we actually find a bottom above this previous bottom over here, and then if we break this dual resistance level over here, this ceiling around the 39.49, then okay, then I believe the S&P is going to reverse, the market is going to turn bullish again, we are going to reverse this mid-term bearish bias over here, and this is it. So far, the bears are winning this battle. So far, it feels like this is just a dead cat bounce, especially if we trigger this top sign next week. What's more, if we actually trigger this top sign, the next support level on the S&P is 37.73. What is our last hope for in order to avoid this bearish sentiment? Well, as I told you guys, tech stocks. If we take a look at the Nasdaq index, the Nasdaq is bullish. Unlike the S&P, we are above the 21 EMA. We did a higher high over here. Yes, we did a lower low, but we are right now doing a higher high, seeking the next resistance level near 12.7K. In addition, after we did a breakout from this purple line over here, the previous gap area, a previous top level over here, we found a support level at this purple line today around 12.4K. So this key point is right now working as a support level. If we take a look at the 1 hour chart, we see it clearer, right? It feels like we are already reversing the trend on the Nasdaq index, and this is quite crazy because tech stocks right now, in the middle of all of this storm concerning banks, concerning the Silicon Valley Bank, etc., tech stocks are surging as a safe haven in this scenario. This is quite interesting right now, how things change drastically in this market. So tech stocks, I believe the S&P index is, as far as I remember, tech stocks represent roughly 28% of the S&P index. If the Nasdaq index keeps doing like this in the weekly chart, the Nasdaq just did a bullish engulfing candlestick pattern above the 21 EMA. What's more, we broke the 21 EMA over here, doing a bullish pivot point, lower high, higher low. Right now, we are finding a bottom level, a support area above the previous low, above the 21 EMA, and if we actually confirm this bullish engulfing, maybe tech stocks are going to surge once again, and this could avoid a bearish scenario on the whole market. If we take a look at the Dow Jones, the situation could not be more critical. The Dow Jones is triggering a bearish pivot point right now. So in order for the Dow Jones to bounce, in order for the S&P to avoid another bear market, we must see tech stocks reacting like they are reacting right now next week. And in this scenario, I believe the S&P could easily retest the 4100s again, midterm speaking. Another thing that reinforces the resistance area around 39.49 over here, in addition to this black line, in addition to the 21 EMA in the daily chart, is the 21 EMA in the weekly chart. Because this is quite curious. The EMA in the daily and in the weekly charts, they are both in similar levels right now. Usually when this happens, it is an indicator that the market is very, very uncertain. Right now, the 21 EMA did work as a fantastic resistance level over here in the weekly chart, and right now we are dropping again. But this is a good bullish reaction. The S&P is indeed trying to find a support level above this purple trend line over here, which is the upper line of this descending channel. So we are struggling to avoid entering this descending channel again, entering a bear market again. If the S&P succeeds in finding a bottom level over here, probably tech stocks are going to help us with a bullish scenario and we might retest higher levels again. Now the 37.73 is our key support level, because if we lose this support level, then probably we are going to crash to much lower levels, because this is a possible double top chart pattern, right? And in this scenario, I believe we're gonna seek the next retracement in the weekly chart. I'm so sorry, in the monthly chart, which is, we found a support level at the first one, 38.2, we bounced it. We found a support level at the second one, 50%, and then we bounced it. Right now, if we actually trigger this double top chart pattern in the weekly chart, I believe we are going to retest the next retracement. Therefore, it feels like it is now or never for the S&P. A good bullish reaction must occur as soon as possible, otherwise we might resume the bear market again. So of course I'm gonna keep you guys updated every single day on this. So remember, my dear friends, to subscribe this channel if you're new around here, check my newsletters, join the top 5% of traders that can actually make money while beating this market. Thank you very much for your audience, my dear friends. Stay safe. See you guys next week.